Take a look at Tesla shares. Well off the lows, by the way, of the session. This after its latest delivery numbers did miss estimates. In fact, weakest numbers in nearly 3 years. Of course, we are also waiting for the tariff plans from the president. That'll be later today, and of course, is expected to impact the automakers. Joining us now is former Ford CEO Mark Fields, also has served as CEO of Hertz, and we're happy to have him as CNBC contributor, particularly on days like this. I bet sometimes you're glad you don't run one of these things anymore, Mark, are you?
Yeah, it's kind of a good time to be a retired auto exec, but it's always in your blood. So there's always something interesting going on in the auto industry, and it's really interesting right now.
No doubt it's very interesting right now. What rises to the top for you, I mean, in terms of Tesla and the continued erosion, perhaps, of their market share? Or is it more about what we're going to hear later today from the president and what impact that really is going to have on the automakers?
Yeah, I think there was a lot of noise in the quarter for Tesla, right? Because, their sales were down 13% year over year. They've been kind of losing share, at least on registration data, in all their major markets, whether it's China, Europe, or the U.S. I think in the quarter you had a couple of things going on. One is they were refreshing their Model Y, which is their best-selling vehicle. So they had a lot of changeover in their 4 plants around the globe. So that took out production. And then there's the other piece, which is, how much of a reputational damage has Tesla incurred because of Musk's involvement with the Trump administration. So I think there was a lot of noise in there. I think the second quarter is going to be very telling because you take the noise out of the, production interruption that they had in the first quarter, and you really get to see what the true demand is for Tesla with, Trump, with Musk involved with the Trump administration and the impact on them.
Yeah, and of course, as we've made the point, and I know you have as well, they're probably the least affected or impacted by the tariffs as well, given their domestic production is typically for domestic consumption as well.
Yeah, they're the least impacted, but, keep in mind, they produced about 30,000 units more in the first quarter than they sold. But, yeah, they are the least impacted. But, David, as I mentioned before, there is no vehicle that will not be impacted by these tariffs. I mean, Trump is calling it Liberation Day for the auto industry. It's I'd call it a little bit more like a crash test day because these are going to raise their cost, and then the automakers are going to have to make the decision, how much do they price versus how much do they eat in their own margin? And, if I were running a car company, one of the things that I would do is on the sticker label going forward, I would actually call out a surcharge on tariffs so consumers can see that very, very transparently. And it's also easier to change it if the tariffs go up or down going forward.
So is it possible to get a car made fully in this country? I know you said now it's globally complex supply chains, but is it possible to get there?
Right now, absolutely not, Sarah. When you look at, vehicles that are assembled here in the U.S., about 45 to 50% of the parts come from outside of the U.S. And many of those supply chains have been developed over decades, and moving them very quickly, it takes a lot of money and a lot of time. So the simple answer is no. And listen, I understand the Trump administration, what they're trying to do, because, the U.S. imports about 3 times the value of the automobiles that they export. And, again, I would be, if I was with the automakers, I would really be lobbying the Trump administration, particularly on the parts side, for those parts that meet the USMCA agreement to be exempted. But, Trump's looking at, versus his last time in office, the imports from Mexico have about tripled. And a lot of that has to do with Chinese suppliers going and building plants in Mexico and trying to get around the import duties.
Hey, finally, Mark, there was this piece on the tape this week about Mercedes reportedly considering pulling their cheapest cars from the U.S. market because it's simply impossible to make up for the tariffs on those lower price models. Do you think that's likely and at scale? And what does that do to consumer choice?
Well, overall, if Mercedes does that, the other automakers may be thinking about that as well. For example, GM has to make a decision. Many of their lower priced vehicles are coming from Korea and Mexico. And listen, at the end of the day, if you can't make an economic profit on these vehicles, you have a choice to make. Do you just eat that to keep your product lineup full? or do you decide to withdraw the market? So they could decide to do that. And Mercedes is particularly exposed. They import probably about 65% of their vehicles into the U.S. So even their high-margin vehicles that they produce in Europe are going to be dinged on profitability. So I think you're going to see a lot of automakers make a lot of rational decisions around what they do around the economics of their vehicles given these tariff positions.